Welcome to the Reimagine podcast. Each week, give yourself 30 minutes and meet the people working hard to create the future of insurance today.
Hi, this is Paul Tyler with a special episode of both the Reimagine podcast and That Annuity Show. We recently organized a forum in 5 parts focused on reimagining retirement in a post-COVID world. Today, we're sharing the conversation from forum number 4, which was delivering products of the future for the next generation of retirees. So, Laura, welcome. And, tell us, we had a really good panel, and especially we had a terrific moderator.
Who was that?
We did. We haven't gotten to that point yet, Ramsey, but we were lucky to have a terrific panel. So we had Blair Baldwin from Age-Up. We had Jan Buchsbaum from Nassau Financial Group, Abby Levy from Primetime Partners, Scott Moody with K4 Connect, Aaron Shapiro with Dayforward, Tyler N with Retirable, and the moderator of the hour, our very own Ramsey Smith with ALEX.fyi.
So anyway, thanks guys. That was a really fun panel. And so one of the things that's very clear is that the strength of that panel was in the panel itself, not so much the moderator. It was just great to be, able to be with such a creative group. It was a fun mixture of people that I happen to know very well, and then some other folks that were brand new for me. And there were a few things that came out that really, in some cases, blew my mind. So one in particular was the question of adoption. So if you think about it, everybody in our space, in the insurtech space, is, especially in the retirement area, is hoping that older Americans are going to adopt technology in a more meaningful way in the past. And I think that in general, corporate America underestimates how much older Americans are already using technology. And so one of our panelists, Scott Moody from K4 Connect, who provides technology-based services inside assisted living facilities, said that among a target audience of customers, I think it's 40,000 customers they have, 85% of those customers who have an average age of 85 are using the technology. We're using the technology once a day pre-COVID. But since COVID came around, the usage rate went up 500%. And that was just, for me, that was an absolutely remarkable stat. And the other piece here that was really remarkable to me is that all these really smart people who were approaching these issues, in terms of how they built their businesses, each entrepreneur that we spoke to had their own style, and 2 sort of examples of it, I'll call them extremes. Blair Baldwin is building a business within the context of a major life insurance company. And that's worked very well for him and his strategy. Aaron Shapiro is building a carrier from scratch, and that's working very well for him. And he's modeling it after some companies in the P&C space that have done that. So it was just an amazing panel on a number of fronts, and was just honored to be able to be a fly on the wall.
Yeah, and it's interesting. So for me, talking about there's different strategies, right? So meeting people where they are. So in this case, it's the retirees. But what if we didn't just meet them where they were, but then also thought about products, either new or additions to current products that are specific to that group, right? So why do we have to offer the same things we've always been offering to a group of individuals that's just growing in quantity? I think as the next 4 or 5 years go by, if we're not creating new opportunity for people to purchase differently or purchase new product, then it's a missed opportunity there. So not just meet them, but create for them as well.
No, I think you're spot on, Ramsey. No, you underestimate the power of the moderator. You did a terrific job actually pulling a lot of your friends in here and assembling a great cast and a good conversation. We will have a position paper come out that will capture a lot of the discussion that took place, and synthesize it. And just to sort of, play up both your comments. Yeah, what is the product? I thought we had a really good discussion around what the product actually is. And if you look at what's happening with interest rates, it's out of necessity. I think we need to the industry needs to rethink and relook how we're making money, what the business model, what the products are. Is the product a signed PDF, or is it, I don't know, Ramsey, a certified I don't know what you call this. It shows you what I need to learn over the holiday. What's a piece of digital currency? I don't know. A signed certificate with, on the registered on the blockchain. Is that the product of the future? Or in the case of Scott's, K4 Connect, is it really like an interface that sort of links our world together in a new way? And we certainly have seen behavior ourselves change. Just since February, I mean, the use of people over the 55 coming into our website is just on a mobile phone has gone up 25%. It's astonishing. So the world is changing quicker than we could imagine. And I don't know. With that, I don't know, Laura, do you want to run the tape?
Let's roll tape.
Real interesting, you kind of ride here in Hartford. If we were in Hartford, Jan Buchsbaum, who's head of product, he's going to sort of help us kick off the Q&A after we get up the panel discussion. Beautiful building, right smack dab in the middle of Hartford. And you talk about ecosystems. If you ever built one for insurance, that's Hartford. From our building, you could probably throw a rock and hit maybe, I don't know, Jan, maybe $1 trillion in assets under management with these different insurance companies. The insurance commissioners across the street, Travelers, the Hartford, AXA, Prudential, you name the companies are all there, plus all the actuarial firms. And, up until about 2016, there really wasn't a lot of activity in the insurtech space in Hartford. We bought the company, and I came up in 2016. Just coincidentally, a lot of people had been doing work in innovation, and all kind of coalesced in Hartford. The mayor, great guy, happens to be a Rhodes Scholar, fabulous guy, said, we should, reinvigorate the city by bringing startup activity in. CT Innovations, Doug Roth was there. Matt McCoy said the same thing. And my connection was through Matt, who said, why don't we do an accelerator here? They're doing one in Iowa. We're seeing some stuff out in the West Coast. I said, yes. And so a bunch of people all came together, and, fast forward a couple of years, we suddenly had, Techstars across the street from us doing an accelerator for Stanley Black & Decker. We've got Upward Hartford, some of the startups, Sylvie Desmet, RU from Belgium, actually came to Hartford to try and build out to launch her startup here in the US. Makerspace, we probably have one of the biggest maker spaces, Laura, in the New England area, maybe 70,000 square feet, you name it, you can make it there. A lot of great things. And what we did is sort of parked ourselves and said, look, these programs are all great, but it takes, come in, do a 3-month program, then what? Look, even if you're an established company, if you're Salesforce, it takes more than 3 months to get a contract with an insurance company. So we said, let's create a community where we bring together people in the community who are kind of like minds, like innovation, want to support startups, with really good people who are, dedicated to driving change in the business. And let's kind of support them over a longer period of time to get their business up and running. That was really our Reimagine part one. Beautiful space. Jan, if you can kind of see sort of the area, it's a really big open white space. Well, pandemic hits. Laura, I think we had an investor day on February 28th. It must have been the last one we possibly could. And we had, how many one-on-ones meetings did you set up with startups and VCs?
About 107, but I'm not sure who's counted.
Yeah, so we've had to pivot like everybody else. How do you keep these forums together where we're bringing startups together with people who are really influencers in the industry, in the Hartford community together, where it's not a pitch event, but it's a chance for people to get to know each other and figure out how to match, problems against people who want to deliver solutions. So what do? We go virtual. Well, even though we sell annuities, we're focused on retirement. There aren't a lot of retirement companies here. Craig Sims is in here, but Vantis was another small company in the retirement space, kind of poking around the edges, but we don't have a collection. So we've used this time in the pandemic to really kind of go bigger and focus really on sort of the areas that our company ourselves are focused on, which is solving a lot of the issues, financial issues people have in retirement. Now, what's the problem we're solving for? Is it higher income in retirement, or is it solving some of the problems that drive the income? So I think this is what hopefully this discussion will spark. We've had some really good calls here, and I've told people our kind of unstated but stated goal is like could we bring together and figure out who are the top like 100 people who are really going to reshape what retirement planning, solving for retirement means in the next couple of years. So with that, Laura, let me throw it back to you, right? Yes.
Yeah, absolutely. So thanks again, everyone, for being here. If you've been on the train with us, you know that this is the part where we break out into the networking sessions. So we've been really thoughtful about who to pair. So you'll find some individuals who you will likely know in your group. You will also find some who you may not know, and that is with intention. So for part of our discussion today, we're asking individuals within the group to briefly introduce themselves and then talk about a similar question. So the question we want to pose to you, and we'll provide it in writing as well, but if you were to create one new product or service for retirees, what would it be? So again,
now, obviously, yeah, some startups are already doing that. Okay. Others, you would, primarily for the others, you quit your day job. What's the, where's your passion in this business? Where would you take us?
And this is the part where I get to hand it over to Ramsey. So I hope you enjoy the networking conversation. I know for me, we talked a lot about different aspects, and be curious to hear your thoughts afterwards. So Ramsey, thank you for being our moderator for today's conversation. For those of you who do not know Ramsey Smith, he is the founder of ALEX.fyi, co-host for That Annuities Show, and the panel moderator for today. So with that, Ramsey, the floor is yours.
All right. Thank you very much. I just sorted out the mute situation there. Thanks all of you for showing up. There are a lot of familiar faces here. There are some friends. There are some just fantastic peers. And what we have here is exactly what we're looking to do. We're looking to have a relatively small curated group of people. And I like to think of this as sort of a modern day salon for the discussion of retirement technology and innovation. So thanks to all of you for showing up. We have an embarrassment of riches in terms of our panelists today. And so let's get right into it. I'll name all the panelists, but I'd like each of you, as we ask the first question, to just tell us a little bit about your business before you answer the question. I think that's the most efficient way to do it. So today we are joined by Aaron Shapiro of Dayforward. Aaron has been in stealth until very recently, so we're lucky to be here, kind of right at the cusp of his exposing to the world everything that he's had going on. We're also joined by Abby Levy. She's the managing partner and founder of Primetime Partners, a joint venture with Alan Patrikoff, and Abby has really an amazing experience set across a broad number of areas, in particular consumer products. So I'm very interested to hear how some of the lessons learned there, bring interesting insights into this problem. We've got Blair Baldwin, founder of Age-Up, and Age-Up has introduced a very novel type of deferred income annuity, one that addresses really more than anything else out there the extended life that many of us and many of our relatives are going to be experiencing. We're also joined by Scott Moody, co-founder and CEO of K4 Connect. And Scott has a very interesting platform that integrates a lot of the tools that are available in the market for assisted living centers and platforms. And lastly, but not leastly, Tyler End, who's the CEO of Retirable, who is doing some very interesting things, bringing retirement planning in a more cost-effective and accessible way to a broader set of consumers. So with that, we'll start with the first question, and we're just going to do this in a bit of a round robin way. And as we go along, I encourage people to speak freely, and Abby, in one of the prep calls, said she was on her soapbox. I invite Abby to get on her soapbox because we always hear good things when she does. So with that, let's focus on the last 12 months because they've been pivotal to society, the country, and this industry, I think, in particular. So I'll lead off with, and I'm going to start with Aaron, and that is, what do you think you've learned in the last 12 months that you didn't know before? and talk about how maybe some of the things that you saw, what surprised you, if there's anything in the process that required an adaptation to your business strategy, and if you've spotted any unmet needs in the process.
Yeah, definitely. Hi, everyone. So just to give a quick intro to Dayforward, we are a direct-to-consumer life insurance carrier, pure digital. The best way to think of us is what Lemonade or Root have done in car and automotive, but focus on life insurance. As was mentioned by Ramsey, we've been in stealth for the last year. We announced the company about a week and a half ago, and we'll be live in our first state in a few weeks. So I think the biggest thing, I mean, it's been a massive education over the last year, because 12 months ago, the company barely existed. And so we've had a year to pretty much stand up a full carrier from scratch and build all the technology to basically, fully power a modern digital first life insurance company. And I think the biggest surprise for me, and I'll spare the COVID answer because of that's, probably a lot of people are going to be talking about that today, is I think the biggest surprise was the reaction from a regulatory standpoint. When I first started this process, I anticipated that the regulators were going to be pretty risk averse and very resistant to a lot of the stuff we're going to do. And probably the biggest surprise was how supportive that they were. I personally met with the head of 8 different commissioners for different states. And what I saw was that they all realized the world is changing and innovation has to happen. And they were incredibly supportive for what we were trying to do, including guiding us to how to think about the regulations in a different way, how they can take shortcuts to help us, all these kind of things where you think about regulators as being much more about a people of no. It was amazing how supportive they are and how eager they were to be part of the change in the industry. And so I thought that was very encouraging, not just for what we're doing, but for the industry at large, that there is potential for real change, and that regulation is not going to be one of the things that is going to hold us back.
All right. Thanks, Aaron. Abby, talk to us about some of the things you've learned in 2020. You've had the ability to see lots of companies, and what are some of the things you're seeing, and what have you learned from the process?
Great. Well, thank you, Ramsey, and to the group here. Happy to be here. I run a small venture fund, about $50 million seed to Series A, and about 25% of our portfolio will be focused on financial security for older adults, because, as you know, half of the older adult population will run out of money. They're just, longevity has outlasted people's bank accounts. And so, we are absolutely looking at a lot of different businesses across the spectrum. And one of the areas, in terms of some of the things I've learned, is that, the incumbents, these are the retail banks, these are the insurers, these are the health insurance companies, that they've known this is coming. It's not like the data didn't suggest this is coming in this direction. I think that everyone really has been waiting for a white horse to come along and kind of save the day, and whether that's government or startups is yet to be determined. And so I think what I've learned is that there's actually a huge desire on the behalf of incumbents to experiment, because this is such a big challenge for them that they don't know how to solve. And so that has been very, very interesting to see the appetite of large institutions to work with startups, to try to pilot, to try new, and to develop partnerships. So I think that has been one thing I've learned. The other thing that's been really interesting is, historically, no one has figured out direct to consumer. In other words, trying to reach people in their 50s, 60s, and beyond has always been a marketing challenge. People have said, listen, either they're not digitally active, or they, you can't teach an old dog new tricks, et cetera, et cetera. And as I'm sure, well, Aaron, to your point, we don't need to belabor COVID, but, everyone will agree that the digital usage and technology behaviors of older adults has shifted in the past 6 months, because it's had to shift. And so I think that definitely opens new opportunities for direct-to-consumer focused businesses, transparently, one of which Primetime's invested in, which you'll hear from in a little bit, Tyler and at Retirable. So I think that's the other insight, is that, in a way, prior to this, there was a lot of aversion to trying to figure out how to reach older adults directly with new financial products and services. And I think we're seeing that change.
All right. Thank you, Abby. Scott, give us your perspective on this question. What are the things you've learned in 2020 that have been surprising and you've adapted to? You're muted.
Thank you.
No worries.
There were really, a couple things. One was just, you had asked about the whole idea of adapting, right? We really saw this early on, launched something we called Project COVID 911. We serve more than assisted living, all of senior living, right, by integrating various technologies into a single solution. And so, we have a bunch of patents around it. We've raised, a good bit of funds. And so, but, we saw that COVID would just be completely disruptive, specifically to the people that we serve where they live. And so, there was really two aspects of that. One, kind of, I've been around for a while, right, in a very cyclical business. My prior company was founded right before the dot-com crash, right? We went public in 2007, right before 2008 and 2009 happened. So, the first part was just getting in a very defensive posture, right? Getting our financials in order and so on and so forth. And then the second was to attack, right? Kind of through the entire process. So that meant, right, we really had to relook at our product roadmap. We didn't really change it, but we certainly reprioritized it based on more immediate needs, right? And so we did that, and, that became relatively successful. So that said, what have I seen that's different, right? So in senior living, look, it's been devoid of technology, right? When you talk about the most advanced technology in a senior living community is often like a string hanging out of the side of the wall. Like, okay, that's a little bit backwards. So we've had, some success penetrating it, but it was really kind of with the early adopters, the people that had a vision of where to go, that, really this whole idea of transforming their operations and communities to a much more technological platform. But everybody's familiar with the idea of crossing the chasm, the technology adoption curve. In senior living, that chasm was actually relatively wide. So people were looking at, geez, do I need technology now? Can I wait to next quarter? Do I start this transformation next year? Et cetera, et cetera. Well, that chasm slams shut. That's over. There's no such thing as a visionary and a pragmatist. Everybody's a pragmatist. They need technology now. They recognize it. The challenge, which is what you talked about in our breakout session, is that everybody comes forward to them with a bunch of disparate technologies that don't work together. Well, certainly, the 85-year-old average resident, right, is not going to try to integrate these 20 different or use these 20 different technologies themselves. And at the community level, they have, they're lucky to have one or two IT people, so they're not going to integrate it. So that whole idea, that's where K4 came in, is, integrating the platform. Now we have to solve today's problem. So it's really this idea of, act tactically, but think strategically. You don't want a bunch of disparate technologies that 6 months from now you realize don't work together. But the big change, right, is just what Abby and others have talked about before. There's just this recognition that technology is necessary. And I'd make the argument that older adults, if it provided value to them, have often used and always used technology. It was a matter of just putting it in a position, right, and driving that need.
All right, thanks. And we're gonna come back to that theme a little bit later too. So Blair, Abby mentioned D2C, and that's very much a focus for you. So we would like to hear a little bit more about that, but also things you learned this year. And I think in a prep call, you mentioned some surprising customer bases. Tell us what you learned.
Yeah, it's been a year of surprises. So Blair Baldwin, I run the team that created Age-Up, which is a new and very novel annuity that's issued by Mass Mutual out of their Haven Life subsidiary, their startup subsidiary. It was really interesting. Back in early February, so right before COVID sort of hit and just kind of dominated all of our lives, we ran a pretty large scale survey of about 1,500 folks, mainly in their 50s and 60s, asking a lot of questions about expectations around like longevity, when they would run out of money, whole lot of questions, basically all longevity oriented. The thing that was really interesting is then obviously COVID hit, and there is a kind of a theory that people's attitudes, perceptions, beliefs around their own health and their longevity would sort of radically change due to this pandemic that we're all living through. And the surprising piece of kind of insight is that actually that's not the case. It's virtually unchanged, sort of the immediately pre-COVID survey and then the COVID survey that we did, I want to say sort of like late April. And that was a really, really interesting sort of little nugget in that, perceptions about how long you're going to live, specifically your chances of living into your 90s or 100 are really sort of unchanged for people. There's one other sort of interesting surprise for us, though, that really has sort of played out over the last 6 months since we did that second bit of research. And that's that the kind of the balance of our customers that are buying our direct-to-consumer annuity product has tilted more towards folks that are actually requesting our return of premium, sort of almost treating it more like almost like a savings vehicle with a longevity kicker if you live to say like 100 and beyond than we originally thought. And I think that speaks to this kind of strange time that we live in that folks are both equally concerned about longevity, but also very much so about their short-term mortality risk. And it will just be interesting to see sort of how that plays out over time, whether that this is a snapshot of today or whether we'll find the same thing next year and the year after.
That's great data, and it's particularly interesting that people are more interested in that return of premium, because the difference in payouts, as I recall from running your model a few times, is pretty substantial.
Yeah, it really is. It really is. So.
All right. Well, anyway, thank you for that. All right, Tyler, tell us about what you've learned in the last year and how it's affecting your business decisions.
Thanks, Ramsey. And for the group, I'm Tyler, CEO of Retirable, where we're delivering holistic financial planning to the mass market. And we are almost 12 months exactly into our journey at Retirable. So quite a few learnings along the way. I think a really big one was just the appetite from this demographic. And we're specifically focused on mass market pre-retirees. So you can think ages 60 to 65, sub 500K net worth, just the appetite to engage in financial planning. And we know that this is a group that hasn't received all the financial advice that they need throughout their careers, and they're approaching retirement on their back foot. But we've shown that, if we can start a relationship with someone and give them some value early, they're more than willing to continue on with their planning journey. So even something as simple as asking what they're going to do with their free time in retirement and turning that into a holistic financial plan covering 100 data points has been really exciting. So we've just kind of doubled down on, taking that first step and engaging with someone so that we can start the planning process.
So is your expectation that your product is a product in and of itself, or a gateway to other products and services?
Yeah, that's a great question. We see the first step in any financial product service or product sale as a holistic financial plan. So getting people to start the process and engaging with them is the first step. Building that holistic plan is the second, and then giving them access to the products and services that they need to help affect a better outcome in retirement. Okay,
thank you. So I think I got everybody in the first round there. The next question is really, it's born of a comment that I've heard many times in the last few sessions we did here, which is about sort of meeting clients where they are, because sometimes that's not always so obvious. So I'd like to sort of go around and, if your answers are quick, that's fine. But it came up in a number of different situations, and sometimes meeting them where they are means something entirely different than is expected. So why don't I start with? I'm going to start with Abby.
Yeah, it's an interesting question around meeting people where they are. I think other people are better versed in talking about the direct to consumer elements of this, but it's that as we all know, there's a real lack of financial education. in general, at any phase of life in this country, but particularly around this phase of life, because it's complicated. Medicare is complicated, which plan to take, figuring out when to withdraw from your 401k, that's complicated. These are very complicated issues. And so I think part of the issue of meeting people where they are is that most Americans don't actually want to engage in the process. And so what Tyler's saying around, he's been surprised by the appetite of people. I think it's because that there's no choice anymore. There's no one there, you're living too long. It would be one thing if you died 5 years after you retired. You're living 30 years. It's a long span of life to financially plan for and not have a plan for. So all I would say is, I guess I raise more concerns than answers around financial literacy and education is still something that has yet to be cracked. I think they still see large financial institutions as Charlie Brown, like wah, wah, wah. So like how we start to change how we speak with people and make it more interesting and sexy is definitely something that, we're interested in seeing that happen, as we look ahead.
Great, thanks. And by the way, to give credit where credit is due, the two people I heard use that phrase, one is Rian Horgan, who's online here, and the other one was Farron Blanc, who was featured in one of the other sessions here. So Scott, what are your thoughts on that question?
Well, it's interesting. I mean, we come from a different perspective, right? We're trying to integrate various technologies and applications, and actually, very likely, if we're taking notes, some of these financial services, right, for the people that we serve. I mean, we spend, at least we used to, a lot of time in senior living communities, and we do that from our engineers to myself, and then we bring a lot of people in, right, to do testing and user testing. They love providing, believe me, they love providing feedback. So we really have no problem getting feedback. It's been a little bit more difficult, in the situation that we're in now, but, we've had video chat as part of our app, et cetera, et cetera. We do really have this focus where our customer is the senior living community operator or owner. The member is the resident, and we're very much a mission-centered company, believing that if we improve their lives, then the benefit flows to everyone else. So it's interesting. People are talking about financial planning or life insurance products. We're really focused on making someone's life, right, easier, safer, more convenient, more engaged, healthier, all those things that will actually expand that, right? But, Abby's right. I mean, and I heard it in the breakout session earlier. When people come into retirement, and particularly when they're looking at a senior living community because of an event that may have happened in their lives, it's confusing and it's exceedingly difficult, and they really don't have anyone to turn to. And often those are people that honestly you're really just trying to take advantage, right? Get their name on a list, trying to sell them to a community, so on and so forth. So it is a real quagmire when you talk about these. It's some of the biggest confusions I see out there, when I'm dealing with family members and the residents.
Well, and if you're in the assisted living facility, you actually literally are where they are. So you have a leg up on
it is true, but the delta, and we're working to move into affordable housing because many of our customers are nonprofits and they do that. But the dichotomy between a private pay community, right, and one that is dependent on, Medicaid, it's night and day. And then, you take another step at the affordable housing level. So I really appreciate that. The whole idea of the people that have less than $500,000 of assets, which are a lot of people.
Yeah. So Blair, what are your thoughts on that question? You have a very unique product, and how are you bringing that to people instead of a place where they're feeling a clear pain point?
Well, I think the topic of education has come up a few times, and for us, we're really looking to speak to people who are actually on the education journey themselves, so that they're reading financial blogs, they're listening to podcasts, they're self-directed digital users that just happen to be in their 60s. And we're trying to meet them with sort of content along the way that sort of talks to the problem that we're solving. It's a narrow problem, it's one of longevity, but also then sort of raises the product solution that the Age-Up is providing, and hopefully encouraging them to come to our site along the way and get a quote and buy it. So it's really about sort of engaging them through that sort of digital content. This is obviously not for the whole population of people. It's more for that self-directed digital buyer. But there are a lot of them out there, especially, another topic that's come up today is just how much, COVID has sort of forced more people sort of online into these purely digital channels.
All right, thank you. All right, Tyler, your thoughts on that, and you'll be first in line for the next question too. So we're going to hit you back to back, if that's okay.
That's great.
Right.
Yeah, so it's an interesting question of focusing where they are, and that's kind of the approach that we've taken. Is everybody has somewhere that they go for advice, and that might be their brother-in-law who works at a bank, or a coworker, or a seminar at work. So we really focus on, what are the triggers that get somebody to start asking questions? And so we focus on things like Social Security and Medicare as entry points to planning, because these are really big, urgent questions that people have to answer. And fortunately, with this group, it isn't as saturated on the advertising as front in some of the digital channels. So we've actually seen really good results on like Facebook, for example, where people will have conversations with each other around these financial topics, even strangers that they've never met.
Amazing. All right. So I just realized, Aaron, would like to get your perspective on that question, and we'll come right back to you, Tyler, with the next one.
Sure. So I've been doing things on the internet for the last 20-ish years. And if there's one thing I've learned, which is that anything that can possibly be sold online has been sold online. I remember all the discussions like, will people ever buy diamonds online? No, that's impossible. Will people ever buy groceries? And no matter what it is, the answer is always yes. And so when I apply it to this space, I think that same thing holds. I don't think financial products, broadly defined, like our world, is going to be the one exception to the universal rule that everything else is sold online. And so I looked at the problem of, why is it that this sector has had so much trouble? And I think it boils down to that this industry hasn't done a great job. Our challenge in this industry is to make the products and the messaging and the process of buying as simple as other categories. And all the other categories have gone through a journey of going up the internet sales curve by forcing radical simplicity on both the sales process and the products themselves that are purchased. And that's the journey that we have to go through today for this category. And it's not a question of whether the stuff we're talking about is going to be sold online primarily. It's a question of, it's not if, it's a question of when, and basically how long is it going to take for us to finally crack these problems so it's sold at the same scale as every other sector of our economy.
Right, thank you. So the next question is really about how each of you chose your strategy, because as I look at what each of you've done, like we're all trying to solve retirement in some form or another, but each of us is not just attacking a different element of it, but we're making different strategy decisions. So as an example, Aaron building his own insurance company. Blair is working with Mass Mutual, so is doing it effectively with a legacy player. So each of you as innovators has made some decisions, sometimes very different decisions, to try and achieve the same end. So I'd love to hear about why you thought one particular method was the way to go. So Tyler.
Sure. I think one piece of differentiation for us, kind of counterintuitive to other fintech peers, is that we kind of look at financial planning as deeply personal, and retirement advice, financial planning advice has always been delivered by this human advisor, regardless of what the product is that they're selling. So we always make sure that our plan has a human behind the scenes, and we give people access to text and chat with a real CFP. And whether or not they do that is up to them, depends on how they want to engage with us. But letting them know that there's a human behind the scenes is really big for building that trust and conversion. Okay,
fantastic. Blair, what are your thoughts? Blair has actually started a couple different companies, so you've done it in a number of different ways. So tell us why you're focusing on this methodology now.
Oh yeah, so before Age-Up and Haven Life and Mass Mutual, I founded an insurtech called Quilt, and we were basically like a digital agency and an MGA, largely on the P&C side, but we did some interesting stuff on the life side also. And one of my biggest frustrations in that whole journey was that we really didn't control like product manufacturing and pricing and like the nuts and bolts of actually what makes a product work. And you really have to be a carrier to do that. It's very hard to be sort of a startup. So by the way, Aaron, I absolutely applaud you for what you're doing. When I started my last startup, it really wasn't an option. There were no startups that were raising capital to become carriers. It wasn't like a thing. So there's no like sort of like reference point like there is today. But I think to some degree, you really have to do that. You either have to be sort of lucky enough to be in a carrier that can sort of embrace change and almost set you up in like a random little subsidiary that nobody looks at, and you can just go and do really interesting stuff, or raise the venture capital needed to actually buy a carrier or do something interesting so that you can control manufacturing. Because otherwise, you're just limited in how much you can do when you're just kind of playing around with a sort of almost just a digital front end. So
thank you.
That's just one perspective, though. I know it's a little controversial.
Yeah. Well, and you started another one. Goji was yet another one that you started as well. So you've done a number of things. Abby, as you're looking at companies and you're deciding kind of who you want to put your money behind and who maybe less so, like what are some of the structural decisions you're looking for? Like, again, we've already seen a few different models here. What do you like to see when somebody presents you with an idea like that?
I mean, I'd like to say that I had some specific formula. I think it's a lot more around have they figured out who pays for what? And I think it's a very obvious statement, but I think one of the challenging pieces is when you're dealing with retirement, where already the retiree is, the whole point is they're strapped for cash. It's really hard to push too much down to them in terms of, out of pocket and fees and things like that. And so I think what we're looking for are revenue models that have been somewhat proven or vetted. And so take, for example, financial advice. Financial advice there's always been a market for that. It's usually a percentage assets under management. So if you then transition that to a subscription business, people are understanding, well, listen, this is a lot cheaper than giving up a percentage of assets under management. And the same thing with the direct to consumer insurance products and other products. If they only knew what brokerage fees were, they would get excited to understand that, that there's, that there's some set of I wouldn't say arbitrage, but, there's some savings there. So I think what I'm really looking for at this early stage is a business model that makes sense for all the stakeholders. And that's very challenging, I would have to say, in this space. But if I look at the people on this call today, all the founders here are figuring that out because historically the incumbents have made a lot of money on these different financial products. So there's got to be a way, through that.
All right. Thank you. So Aaron, right, you took the bold step of starting the company. Tell us a little bit more about that. I thought your comments about the openness of the regulators earlier was pretty fascinating, but having made the journey, and I'm sure it was not easy, sounds like you're glad you did it.
Yeah. So first, I want to thank Blair for giving me a full answer ready, because I concur with everything he said. But what he mentioned was really our thought process, which is we felt that the only way to solve this problem is you have to address the whole value chain, from the product itself to how it's sold to all the marketing communications around it. And if you look at it broadly, it's actually part of a broader trend you're seeing across many industries, which is the internet is forcing verticalization. Right, you have on one hand the Nikes of the world that are more and more selling direct, right? Because they don't want to be they don't want to be commoditized by the Amazons. And you look at Amazon, and more of their sales are brands that they own themselves, where they're creating Amazon Basics and all these anonymous brands to capture more of the value chain. So it's not a unique thing. What we're doing might be a little bit unique for life, but it's not unique when you look at the broader digital landscape. If you verticalize your business, you control the full customer experience broadly defined, which means you can fully meet customer needs, which is the products they're buying, how they buy it, how it's serviced, and all the messaging around it. And that's what we think is the formula, not just to be successful in this industry, but in every industry. We're just applying it to this industry, which is kind of a new thing, but I think it's where the world is going, both this sector and many other sectors. And I will say on the regulator side, it wasn't my biggest concern when starting this company. And what I found is that if you're doing something that really is in consumers' interest, they're amazingly supportive in my personal experience, because they exist to be pro-consumer as well. And as soon as they realize you're not trying to, game the system and do X, Y, Z and do some fancy thing that makes you insolvent or getting more commissions to screw the consumers, once you kind of eliminate that skepticism they naturally have, they end up being very supportive because they really want the same thing. And I really believe that our product is pro-consumer and what regulators want to do, even when we don't technically adhere to all the regulatory guidelines. And that's been the negotiation, which is once they understand our intent, then they're very flexible about changing things on the margins, because they understand that a lot of those regulations were created in a pre-internet world that just don't apply to how things are really done today. And then we found a remarkable degree of flexibility and accommodation.
So that's interesting. All that's very interesting, but the big nugget there is you got them over the hump. There was a trust hump. They had to trust you, and you had to get them past that, and that opened up a lot of things. That's not a small thing. So congrats on that.
Yeah, and in full transparency, we had help because a member of our board is Maria Volo, that some of you may have heard of. She used to be the head insurance regulator for New York State, the commissioner, the superintendent for New York State Department of Financial Services. So it certainly didn't help that she was in the room when I made these pitches. It certainly made it a lot friendlier. But I had to go through the same process of courting her and convincing her to put her name behind it. So we still had to go through that journey of, showing the world we really are pro-consumer.
All right. Well, I always like to say that NYDFS is the OG of insurance regulators. I'll probably get in trouble for saying that, but it's true. All right, Scott, tell us about some of the decisions you make. You're also a serial entrepreneur. You decided to go enterprise. You might add on direct to consumer. Tell us about that.
Yeah, so it was all circuitous. I'd like to tell you, I thought about this all ahead of time, but it was completely random. So, as you know, my prior company had been acquired by Apple. It's now the Touch ID. And I retired. I didn't really like being a public company CEO. I was pretty burnt out, swore I would never work again, double swore I would never do another startup, and retired here to North Carolina. I was actually on a trip to Rwanda when I met somebody. I won't go into the details, but I thought doing so much good in her life that I needed to do more. And so that was the idea. I came back, spoke to my wife, not dead yet, not burnt out anymore. I need to do more. I don't know how to do much, right? So maybe I know something about startups. We got lucky once. Why don't we start another company? And if it's successful, we could use the proceeds to help others. So all our founder shares are committed to other services, right? So that was the idea. And so we're developing what we call this technology that we integrate everything with, which we now call Fusion OS. Filing a lot of patents, really hadn't picked a market yet. It was just a bunch of engineers working together on kind of invention category. And we were thinking of hotels and homes and businesses and so on and so forth, where you would integrate all these things. And then I honestly, I had a coffee with this guy. He was an advocate for the homeless, raising money. At the end, he asked me what we did. I told him all these things, that could be integrated into a single solution. And then he said, that'd be a great product for me. I have MS. And literally at that cup of coffee, pivoted the entire company, realized the calling wasn't just the money, it was the tech itself. So we really focused just on older adults and people living with disabilities, right? But then, how do I get into, so I'm thinking consumer, right? Consumer's super hard. And then remember, we're dealing with a more challenging demographic when it comes to technology. But I was, longer story, but kind of committed to losing all our money on pursuing this mission. And I was busily doing that. And then I met a guy, right? You can see I don't have any ideas myself. I just meet people. I met this guy that built up all these senior living communities. And I was like, oh my God, that's B2B2C, right? So our customer, as I mentioned before, is the operator, right? The mission, right, is to improve the lives of their residents, our members. And that's really how we came to the whole thing. Now, that said, once you start looking at that, it's an exceedingly hard market, right, that has really been devoid of technology. Our solution, right, was, completely unique to them and really kind of on the market. But the fact of the matter is there was a lot of work from there. I didn't know anything about older adults. I didn't know anything about senior living. And just learning, everything from payment mechanisms to just the UI. So there was a lot of work, experiments, right? Trying something, trying it again, right? And so it's just kind of repeat and approve, repeat and approve. And just the whole idea of being agile and being able to do that quickly. This is why we had so many, there were parades of buses sometimes coming into our building with everybody's in a wheelchair and in a walker. We definitely didn't look like your average startup, but we spent a lot of time really understanding, who we serve.
Oh, fantastic. All right. So we're out of time for the moderated portion of the panel. I want to thank everybody for answering the questions. I'm now going to hand it over to Jan Buchsbaum from Nassau Re. And the best part about this is that we're going to be opening up to your questions. And just looking at the list here, I've never seen as many questions as this in the chat. So let's run with it, Jan.
Hey, so I think most of those questions are answered, so we can just make it a dialogue. I was listening to the conversation the last, 45 minutes, an hour, and there's a couple of things that kind of stood out from me that I think would make for a good conversation. Well, one first is everybody here is highly focused on the consumer and creating consumer value. But the big question here, and someone mentioned this in one of the actually chats, that they talked about addressing the elephant in the room around distribution. So everybody here is also talking about and thinking about how to kind of disintermediate distribution. On the carrier side, like you think about why, I think maybe Aaron mentioned this and Blair, right? You have on one hand, right, carriers who perhaps have been ingrained, older carriers that have been in the insurance industry for a long time and maybe hesitant to try kind of new distribution angles because they're profitable doing what they're doing, right? And then you have other distribution companies that don't necessarily have a carrier to make or manufacture some of these innovative products. So I think there's two different angles that people can come in at this at, but the overall goal is how can we, change the game in terms of designing products that are more consumer friendly, perhaps disintermediating distribution. Maybe that's a good place to start the conversation in terms of maybe some of the challenges going D2C. The one other thing is financial services being complicated. That's a theme that's also come up a lot, right? So consumers definitely need advice, and there isn't necessarily a centralized location to get it. The one question I have is, and I agree that it's a matter of when people start purchasing these products online. And I guess the question is, can we make it simple enough that people can purchase D2C online, or maybe it's direct, but with a human if they want to kind of opt out from a fully digitally integrated process to actually speak to someone to guide them towards a solution. So those are some of the broad themes, but maybe the distribution component is somewhere where we start. Curious on thoughts, maybe Blair or Tyler particular, Blair, you've been working with, a larger company, but really, who has a massive existing distribution company that you are within it trying to kind of disrupt a little bit.
Yeah, I mean, look, we're like fully outside the mothership. I mean, so much so that I've actually never been to Springfield. We are literally like a startup doing our own thing off on the side. Which, by the way, I love MassMutual. I think the world of them. I'm just not involved in any traditional distribution stuff. The reality is direct to consumer is really, really, really hard. You need some like thick skin and some like deep pockets to play, because it takes a while to get it right. But once you can, through like sort of great product design, simplicity, a lot of these other sort of themes that have come up, I think it really gives you a competitive advantage over everybody, but equally important for me, like I just want to help as many people possible. And so once and we're not there yet, but once we like get the sort of the product right, the UX right, the messaging, the language, all the stuff that goes around it, I then actually look at this as a potential almost like reverse path back into traditional distribution, because then we will have sort of figured out so many things that we can get the product to a whole lot more people. And maybe just one sort of anecdote here is that one of the things that we found sort of along this way is that, yes, there are people that just want to buy things fully digitally in this demographic, but a lot of times they want to take a product or a concept to their financial advisor or their agent, and they want to discuss it with it. And so that it's not really a black and white, either digital or not digital. It's a lot of like gray and a lot of hybrid. And so as somebody who's sort of working in this space, really the challenge is sort of creating like the tools that will let sort of people on all ends of this sort of relationship dynamic sort of like function together. So I'll stop there because I realize I just said a whole lot all at once.
Yeah. Craig Sims, maybe you jump in. You maybe tell people kind of you've had a very unique journey here, carrier and direct. Well, what's the answer to Jan's question, having lived this a couple times?
Yeah, we went direct in the middle of also selling through bank distribution as well. So we had agents selling in banks. We had our own direct side, and a couple of my banker friends that we were selling through said, why are you undercutting us by going direct to consumer? And I said, if you sold more life insurance, I wouldn't have to go direct to consumer. And she understood that perfectly. So, but the question for Blair, and this is part of the things that I talk to insurers about as part of my consulting practice is, I bring up Haven a lot, and I say, I'm not sure if MassMutual is leveraging Haven as a lead vehicle for their agents, right? So what's the average term case size at Haven? My guessing it's lower than most MassMutual agents want to sell, right? And that's why one of the reasons why Haven exists. So why not use that lead, that 34-year-old that came in and bought a $500,000 term policy, hand it over to a MassMutual agent and said, here you go. Here's someone just at the beginning of their lives, their earning lives. You could probably sell them 12 other products between now and the time they retire at 65. So there's a way to balance both, I think. If you're a smart company using the lower areas of protection on the life insurance side as a way to bring people in on D2C, and then use that as a lead gen on the agent side. Same thing can be said for retirement products. I mean, how many financial advisors really want to sell a $40,000 annuity, fixed annuity? And not a lot, right? So have that sold direct to consumer and then hand that over potentially to a financial advisor to see if they have any more investable assets.
Hey, Scott, I know you wanted to jump in here if you have any thoughts to add.
Well, obviously we're a different kind of distribution, but one of the things that I always find interesting when you're talking about older adults is it's as if, that's one group of people. Obviously there's products here that we're talking about from 55 to 65, but even if you take a survey and you fill in your age, right, it's like 10 to 20, 20 to 30, blah, blah, blah. And then all of a sudden there's like 65 plus. So everybody over 65 is not the same, right? Does not have the same acuity levels, doesn't like the same things. I'd argue most people in the 55 to 65 level are pretty technology astute, right? And then then you'll start to see the more rapid changes. So, right, the care, what somebody that might be 70, in good health, good mental health, et cetera, and what they can do online, right, is far different, right, than somebody that might be 80 or 85 and not have that same acuity level. And then it's a matter of trust, because it's that whole avenue of how do they know who to trust, and that is really a big advantage, right? I mean, a lot of people prey on that older population. So the one thing I would think is, when you're thinking about kind of older adults, it's not one group of people. They are far different. And just like we think about different demographics from 10 to 65, we really need to think the same way for people over 65.
Hey, Tyler, it's just something you mentioned jumped out. Rian actually, and hopefully I'll pull her in and get her perspective as well. You got an interesting model where which wins, human or machine? When does the human? When do people want? Does every conversation eventually lead to a human? Forget about if they're forget about who they're contracted with and who the W-2 is with. Does everything end with a human, or do you see there are just these sectors that will absolutely do this stuff all themselves?
Yeah, not everything ends with a human. And per my comment in the chat, what we've seen is that for everyone, they kind of want to start digitally, build up the language, understand the concepts, and then they'll speak with someone once they're comfortable and ready to engage. And that's overcoming that inaccessibility that we've talked about quite a bit. But one of the learnings that I wanted to share with this demographic that's been so exciting is that they're really willing to engage digitally and willing to share information about their financial lives. So one of our big data points is that almost 30% of our first-time users are willing to share up to more than 50 financial data points on their first session. So these are people comfortable using the technology, but we always want to make sure that we're giving them whatever path they want in order to engage with us. So whether it ends with a phone call from our W-2 or not, we're happy to make that available to them and make their lives easier.
Hey, Rian, I'm not going to use the word senior. Users of your app. When as a person, when do you hand this off to a third party? How does your ecosystem work? How do you see it working? 2 years, 3 years down the line.
Yeah. So look, I came from the world of human advisors, so I don't have this predisposition of it needs to be all tech or it needs to be all human. I think the question is what meeting our customers where they are in that moment and what are they looking for. So Tyler mentioned this kind of research journey and we see it over and over again. This customer is on a research journey. They want to do a lot of research online. What we see is our customers are really savvy. It doesn't mean that they're reading the Wall Street Journal or trading stocks, but they have developed a financial literacy over the course of their life, and it comes from doing their homework and doing their research. I mean, this is like the Reader's Digest, generation. But I think there's going to be moments in time they're going to talk to people, but people doesn't necessarily mean a financial advisor or an insurance agent. It might be their next door neighbor, right? And so I think there's this shared set of experiences that people are going to talk to their community about. There's another set of experiences that they're going to seek out advisors. And I would look at Medicare as a perfect example, which is consumers spend a lot of time doing research online. The first year that they buy Medicare, they're more likely to use an agent or a service that has a phone-based system. But if you look at the data of Medicare sales this year, if you're in your second year of buying Medicare, you're much more likely to actually buy it online. And so I think there's just there are these moments where you're going to need different types of experiences. And what we get really excited about is actually building an experience that allows for that. And so our retirement store has a series of partners in it. Some of our partners are 100% human. Some of the partners are a mix of digital and human. And, our view is that depending what our customer needs that moment in time, they can find that right service that's going to meet them where they are.
Interesting. And Tyler, you made some interesting comments about Facebook as it turning out to be, I think, an interesting way to engage people. Abby, this may sound like a little bit of a random question, but you could look at insurance and say, this was the original influencer marketing business, right? It's, you never drove down the highway and saw billboards, advertising life insurance. It was all word of mouth. Now, you spent some time with, as I understand, with SoulCycle. There's a business model where, man, you got a passionate group. They tell each other. I mean, I have friends who just, I won't tell you how much they spend on SoulCycle classes. What could we learn as an industry from a business model like that?
Oh, I've never been asked that question. It's a really interesting one. I think that there's, I think one of the things you can learn is it's less SoulCycle's success. Yes, there's the peer-to-peer, but ultimately it was kind of these star instructors that you kind of follow your guru, you follow your coach. And we see this in health, where there's lead influencers that might be your primary care physician might be, somebody that you really trust with these big decisions. And so I do think that there's kind of, I wouldn't say a group think, but I think that there is the authority. I think one thing you can take from SoulCycle is the authority that the instructor has. Who is the authoritative voice or person? And that we've seen historically has been a financial advisor, someone who sat around the kitchen table, who knew your kids' names and was that authority. What is the new model of an authority? I don't mean like in a tops down, big brother's watching, but just more someone that you trust, that you're willing to follow their recommendations. And I think that's the piece we forget, is that these are all guided decisions, most of these. And so the question is, who's your guide? So to Rhiannon's point, it could be your neighbor, but I think that there's a difference between an influencer and a guide. And I think that's the piece that we're seeing here, is that people are looking for guides in this space. So I think that's one thing that I see as a corollary. And then I think the other piece that you have to remember is that these are very emotional big decisions. This is a very emotional process. And I've talked about this with a lot of our portfolio companies when it comes to issues addressing older adults. It's just and it's a very heterogeneous group. Whoever said that, I completely agree. What is the emotional connection you're creating? And I think, and how are you taking care of the financial stress underlying every person that we're going to be dealing with, unless they're in the top 1% of the 1%, and even they have financial stress, is combating an underlying feeling of financial stress. So, SoulCycle connected emotionally through musics and candle lights and all of these things that were emotional support systems. What are the emotional support systems that we're bringing into financial services around this phase of life? So those would be off the cuff two things that I think could be corollaries, but it's definitely a stretch from fitness to financial fitness.
So Tyler, can we make emotional connections through Facebook?
We can start on Facebook. But yeah, to Abby's point, one of the things that we focus on is some of the non-financials, and we'll drop that in as part of the fact finder for our onboarding, where we're asking all these financial questions about their assets and liabilities and income sources. But we as a group all know that the best outcomes in retirement are going to be dictated by how people spend their time and their money and who they socialize with and where they live. So we make sure that we are starting that emotional connection and getting them to focus on the right things. Maybe it's not $4,000 a month, it's $3,500, but they live a block away from their kids. That's what's going to lead to a happy retirement.
Jan, I think we've got time for one more question.
Yeah, I think just to connect with what Tyler was just talking about, it has to start with how people want to live in retirement. That's kind of the first question. We start with sometimes how much money you have or where you want to spend, but I think those are secondary issues. The question is, what do you want to do? How do you want to spend your time? Let's look at your overall picture. That's the best way to probably create that, I think, emotional connection. And then you can go into, okay, now that we know where you want to live, let's talk about your assets. Let's look at the parameters. Let's look at all of these different things, and we can figure out whether this works and where the trade-offs that you have to make. The reality is, like, retirement planning is more complicated, right, than accumulation, right? If you're 30, you save as much as you can and invest it, and then come to us when you're 60, 65, and spending that money becomes a much more complicated task. I wonder if there's a difference between, I don't know who mentioned this, around Medicare, where people purchase it, they need an advisor, then they're used to it so they could purchase it themselves digitally online. One of the challenges as you get more complex or more expensive products is there that shift between what someone is willing to purchase online, like their cable bill or cell phone, versus a car, which people want to go into a dealer, although that's definitely changing with Tesla, and financial products, which might be $100,000 ticket or $150,000 ticket. And what are some of the things like the larger, like the Teslas of the world have done to kind of disintermediate distribution, get people to trust them and feel confident so they can transact in that way?
Hey, Scott, let me just kind of grab that and just kind of focus, let me grab the Tesla. We'll go there. But I love them.
I know you picked someone up.
Yeah. So, is insurance going to be just, and we think about insurance. Is insurance going to be insurance, or is it going to be something tucked inside a subscription? You bought the Tesla, you went to the retirement home or assisted living center, and the reason the insurance center could do the following is because they had insurance policies behind that was based on people in the room. I mean, from a tech environment, what makes sense with the interface here?
That was for me.
Yeah.
Okay. Look, to me, people are very similar. I mean, unless you're forced to get if you look at an independent senior living community, right? I'd move into one, but my wife doesn't want to, right? I mean, they are so nice. They're like, some of the top ends are like resort. So these are the decisions that people are often making about convenience and hospitality, right? Just to the whole idea of like asking somebody, that Jan said, what do you want? Right. And so, yes, people like to think that they want to live in their own home, but there are challenges with that, right? As friends die, you're not working anymore. That's where you got all your friends, right? So on and so forth. So, but technologically, it's actually quite similar between the two. What you might integrate in a senior living community is different than a home. The services that you can get in a senior living community, you need to now curate in kind of a gig architecture in the home. But technologically, it's interesting enough. It is, very similar. There are cases, though, that, despite all the challenges, people confuse nursing homes with independent living and assisted living. But the fact of the matter is that, you do have a lot of conveniences in independent living. You do have a lot more people that you can, be friends with. There's a lot more activities. And it can literally be lonelier in the home, right? But technologically wise, I would say it was actually quite similar.
So on the theme of technology, we're at 4:22. I want to give the floor to Tyler to give a 3-minute pitch so we can hear more about Retirable and what he's doing there. We'd like to showcase different startups throughout these programs as a way to show people what is going on already within the marketplace and maybe what we can aspire to as we look forward. So Tyler, the floor is yours.
Thanks, Laura. Appreciate the time to tell you a little bit more. I feel like I've been sprinkling most of this in, but as many of you know, I started my career in retirement decumulation at a financial services firm dealing with high net worths. And at Retirable, we're going to deliver that same level of sophisticated professional financial advice to the mass market, and specifically people who haven't been targeted due to their low AUM. And, with more than 2/3 of customers reaching retirement never having seen a financial plan, we decided we need to rethink how that's delivered. So we focus rather than selling products or services, we focus on delivering a relationship with our customers and delivering a free financial plan to them, access to a real human CFP to build that trust, and then a home base for all of their financial planning needs as they transition into the third phase of their lives. So that was our first year at Retirable. And from here, we're excited to be launching some new products in 2021, focused on decumulation and combining financial planning with behavioral science to give people the best outcomes.
That's great, Tyler. Thank you so much for that. Paul, do you want to provide any additional insight into?
Not with this crowd, no.
Great.
I've got one thing I'd like to mention quickly, if I could. So one of the things we didn't quite get to was, adoption rates. So everybody here, we're all betting the ranch on baby boomers and older Gen Xers using technology in a much more intense way than I think the whole world seems to give them credit for. So, just one specific piece of data that I thought was fascinating came from Scott. He mentioned it in our previous in the breakout session. He also mentioned it here in the chat. But Scott, maybe you can talk about this very quickly. Just how much these 40,000 people that you have under your umbrella are using technology every day, especially given their age. You're muted.
So one of the, big issues is people, I joke, right? They take this individual technology, right, that was designed by and for a 25-year-old, put bigger fonts on it, give it to the older adult and say they don't like technology, right? So, one of the challenges, of course, is always to provide value to that person. And when you provide value, whatever it is, right, then people will use it. And so that's really where we have this kind of insane focus. I mean, honestly, if you ever use the Touch ID, it's exceedingly easy to use. It has to have that same, concept, right, with technology and whatever that technology is. So it's not just something that's easy to use, it really provides value. And when it provides value,
share the stats with us though. Share us those stats. These stats are amazing.
But the key is to do that. But when you do provide that value, they use it. And then to that end, right, our average member is an 85-year-old woman, right? And they use some form of our technology. It could be the app, right? Or it could be voice, right? We do everything voice driven as well. Is they use it on 85% of them use it on a daily basis. Like that's a pretty outstanding number, right? They may not, we're not trying to get them to stare at Facebook 20 hours a day so that we can sell them, right? We're trying to serve them, not sell them. And so, but I do think that when people see benefit and you design it right, people will use it. I think that really plays to almost any kind of technology.
All right. 500% increase in usage, you said.
Well, okay. COVID. So what happened during COVID is it didn't go up from 85 to 90. Well, it went up a little bit, right? But the usage by those people went up significantly. So let's say somebody was only using it once a day, right? What we were seeing was it went up materially during COVID. So they were doing a lot more video chats. They were doing a lot more texting. They were, all through the app. They were doing a lot more of X, Y, and Z.
All right. Thanks. Those are great stats. Well, I'm going to share them in other conversations, just so you know. All right. Sorry, Paul, it's all you.
All right, Laura.
No, so I don't know about everyone else, but I've heard obviously a lot of wonderful, great ideas, things that are making me think. But for me, it comes back to that guru. I really appreciate that way to think about it, is following someone with trust for the guided decisions. And it's not just serving for the financial wellness, it's serving for the full wellness. So I like the fact that there was discussion about more than just the bank, but the people, the time, the place, how they're gonna really retire as their whole self. So as you know, we've mentioned before, this is Forum 4 out of Forum 5. Tomorrow marks Forum 5 of 5. So we invite you to join us tomorrow, same place, same time, where we're going to be talking about creating online security for seniors and their savings. So we've taken the path from the beginning to this point today, the product conversation. Now, how do we keep them safe? How do we keep them secure? And what are some things that we may not be thinking about that we should be? So we have a really packed panel tomorrow. Again, we invite you to join us. If you're not already signed up, I'm happy to add you to that list. But thank you again for joining us this afternoon. You will find this content in the form of a podcast, as well as a written white paper. So be on the lookout for your name in quotes and highlighted there as such. So again, we welcome any outreach after the fact. We thank you all again, and we hope to see you tomorrow, 3 p.m. Eastern time for Forum 5 of 5.
We want to especially thank today's sponsors, Launch and Symetra.
Thanks for listening. If you enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more great information about this company and other great startups at imagine.nsre.com.